got to have a specially designed policy though. So a lot of people complain about whole life insurance or IULs, and they say it's only the agent that makes money on those. One, not true in every case. Two, it is true in some cases. So people can design really terrible policies for cash growth, and ones that just pay the agents exorbitant commissions. The way I design these, high cash value, that means high cash value in year one, not no cash value, which a poorly designed policy tends to have no cash value for the first couple years. It doesn't break even until year 15 to 20. And when I say break even, I mean you have more cash value available inside the policy than you've contributed, than you've paid into it. The policies I design, you get 87, 85, 80 to 90% cash value, depends on the company you go with, in year one. Within the first 10 days, or within the first 30 days, typically, you have access to 80 to 90% of the cash value you put into it. That makes a big difference in the growth potential and your ability to contribute to it without having to lock up your gains, or without having to lock up those funds for a long time. So whole life insurance, I love to treat it as a good place to store emergency funds and capital expense accounts. Things that you might otherwise not do anything with it. You just have it sitting in a savings account or a checking account, not doing anything for you. You're not maximizing the use of those dollars. You could put that into a whole life policy and do it in the first year. You only lose access to 10% of it. Well, if you have a nice healthy emergency fund, you're not going to use 100% of it. Even in the case of an emergency, you're only going to need access to some of that, right? Well, you've still got access to 90% of it in the first year. And we can design those so that it's fully funded in 7 years. And you can turn off the insurance costs at that point. And it's still going to continue to grow and compound and still provide you with the death benefit. That's much higher than what you put into it. So how's that for an emergency fund? You get guaranteed growth. You get access to the money guaranteed. Now, when you access it, you're going to borrow against it. So there's a cost to accessing your money, but there's always a cost to using your money. This is one of the key things that I try and teach in this channel. Anytime we use money, there's a cost to it. Whether you're spending cash on something, you're getting a loan, you're borrowing against something, or you're saving it. There's always a cost to it. So here's the costs. One, if you're sitting on cash and you're just saving it, you're missing out on the opportunity to invest that cash, and you're missing out on the opportunity to spend it, right? You can only do one of those things. If you're spending it, if you spend the cash on something, so you got to buy a TV or a car, you spend cash on that. Now that money that you had is missing out on the ability to serve as an emergency savings. So you're not saving it, and you're not able to invest it, so you're not growing it. On the flip side, if you're investing that money, you're not saving it, because most investments are not super liquid, right? So oftentimes, not always, oftentimes you're not saving it. You don't have access to it like a savings account, like an emergency fund. And two, you can't spend it because it's investing. It's doing that one job. When we use whole cash value or whole life, when we use whole life insurance, high cash value whole life insurance, you can do multiple jobs there. One, you can save it. You're saving it inside that policy and you're getting a guaranteed growth. Two, it's giving you a death benefit. Now it's doing two jobs. Three, you can collateralize it so you can spend it if you need to. There's that third job. It's not quite investing because you're only going to get a little bit of growth, enough to combat inflation on a regular basis, okay? So it's good that it's doing that, but it's not quite investing. But you're getting three jobs there. Let's say you pass away in 10 years from now, okay? And you had a chunk of change that you had to choose what you were going to do of those three things. You can spend it, you can save it, or you can invest it. And then on the other side, we've got you put it in your whole life policy. Well, if you had a chunk of change and you decided to spend it, it's gone. If you decided to invest it, now it's growing. Okay, now it's growing. If you decided to save it, it's growing a little bit, right? A little teeny tiny bit, you're paying taxes on it. If you decided to put it in your whole life policy, and we talked about passing away in 10 years. You pass away in 10 years. If you invested it, you've got that chunk of change times X percent. 10%, 20%. In 10 years, let's say it went up 100%. If you had spent it, it's gone. You don't even have access to it. If you saved it, you just have access to the original amount. No gains, right? Maybe 1% extra, 10 years, right? If you put that money in your policy, you have a death benefit that's probably 10 or 20 times what you've started it with. So you pass away in 10 years, you got 1,000% growth. And if you borrowed the money out of that to go do your investing, you also have that. You have the investment returns to go along with it. So you got multiple returns there. You're much better off in that situation in 10 years. So that's the way I look at it. That's part of my channel. It's my pitch. If you guys are interested in talking about that, you can. If you want to talk further about that, I'm putting my link in the chat. You can always do a one-on-one with me. If you guys want to have a chat, watch my videos first. Because as I said at the beginning of this live stream, it's like drinking from a fire hose if you want to sit down and one-on-one and talk to me. But if you watch the videos that I did on it, it's called Infinite Banking or IULs. I've got multiple videos there. But it will tell you, I go into details, and you can learn this whole concept just by watching my videos. I try and put out everything on this. I go into every detail. It's all about transparency here, okay? I'm not selling these policies. They're selling themselves. I'm just educating you on it, okay? If you like what you see, if you see a place for that in your portfolio, let's talk. If you have questions, if there's something that didn't quite get answered, maybe you missed some details, sign up. Let's have a meeting. We can go over it. If you're not sure if there's a place for it in your portfolio, but you're interested, talk to me. I can identify where it would fit in your portfolio. Oftentimes, this is not an investment, but it can take the place of a safe spot in your portfolio. So like maybe you have money just sitting in cash. Maybe you have money in your portfolio that's in a money market or bonds that are very low yield, but they're very safe. And so oftentimes our portfolios are designed to give us some aggressive and some very conservative, right? Well, that very conservative, maybe you don't need it to be in that very conservative spot in a portfolio, limiting your gains. We have some opportunities with the life insurance products that we offer, if it's designed correctly, to meet cash value needs, death benefit needs, but also access to it while you're still alive. But it gives you guarantees, and it's those guarantees, the protection against the downside, is where it can serve a portion of your portfolio. We're not going to talk, and I'm not going to tell you, oh, you should put all of that into the life insurance instead. It's a much better place for it, blah, blah, blah. You know, some people do that. Some people make that pitch, like their goal is to sell life insurance. No, that's not what I'm doing. My goal is to meet financial needs, solve problems, find out if there is a need for this as a place in your portfolio in order to maximize your portfolio, in order to maximize your cash flow, okay? We're always trying to do our best to meet those needs. If I can't meet the needs, I'll tell you. I get some people that are like, hey, I don't have a need for life insurance. I don't need a death benefit. I don't have any heirs. I don't care about that. But what I want is I want some of those guarantees that go along with that. Okay, there might be a place for that. And in this case, I would talk about it and find out where most of your money's at and how much would make sense, right? Maybe you want to pass on some of your wealth to your favorite charity. That could be a need for a death benefit. And you can meet that need with a very small portion of it while providing some protection that you're looking for. I hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time. Now go maximize your cash flow.